management accounting information. So as you know, the last year end was 31st December 2017, and you will be facing the exam, of course, just 1 month or one month and 1 week into 2018. Now, although your exam is scheduled on the first week of February, do not expect the scenario to necessarily be set for that day, because you might get a scenario from 2017 that can be possible, right? Or even, let's say, the scenario is set for May 2018 or June 2018, so you'll never know, right? But of course, the deviation will be around 6 months back and forth, your exam date, right? Not going back to, say, 2013. That won't happen. Don't worry about that. So anyway, the budget for 2018 would have been set in the last month of 2017, of course, and we have quite a bit of information to analyze, which is of course good for you. Being a candidate facing the OCS, it's good to know as much information as possible about the future prospects of the company. So we have a breakdown on the total budgeted profit for the year ended 2018. Now this has been broken down into the 4 lines or 4 product lines that we are offering. Of course, the glasses, jugs, bowls and vases. So the revenue has been given, and we see that the total revenue amounts to 15,920. So going back to the SOPL, our revenue for 2017 was 15,108. And we are expecting revenue to be 15,920, which is of course a 5.4% expected increase in the revenue. Then cost of sales amounting to 8.944 million compared to last year, which is 8.478. So overall, looking at the margin, I have done a calculation for you based on these figures. So the gross profit margin is expected to be 43.82%, whereas the 2017 margin is 43.88%, so no big increase. It's very slight reduction, I would say negligible, right? So they are planning to maintain the same margins right throughout. Then focusing on distribution and selling, we see 1.987 million compared to 1.9, so slight increase. Admin expenses was 4 million in 2017, and we are expecting it to be 4 million exactly in 2018. So no big changes to distribution and admin, which means with the increase in the gross profit in absolute terms, we are expecting an increase in the operating profit to 989, and where the last year's operating profit was 504. So that's quite a large increase, a 96.2% increase, right? So almost a double from the last year's operating profit. And comparing the margin, so we are expecting the margin for 2018 to be 6.21%, whereas in 2017 it was 4.73%, right? So showing progress, or these are the expected figures rather. Now we know that when budgets or standards are created, they can be, attainable standards, or they can even sometimes be ideal standards, where the management deliberately sets targets which are above the expected performance just to motivate employees, right? So the management, the director, should make sure that these targets are not extremely tough, right, and they don't demotivate employees. So for a successful target, or for a target to motivate employees, it should be challenging but achievable. So the directors need to give a lot of consideration to this budget to ensure that this is not too tough or too lenient. Now we have the working for revenue given. So we are expecting the sales volume to be 210,000 for glasses, 60,000 for jugs, 40,000 for bowls and 30,000 for vases. So that would amount to a total sales revenue, or sorry, total sales volume. Let me go ahead and type it over here, of 340,000. So I'll call this total budgeted sales volume for 2018. That's 340,000 units overall. Now this is something that we can link into sales mix and sales quantity profit variances. Now if you take a look at our website, studysima.co.uk, there is a blog post present on advanced variances, and I have extensively discussed about the advanced variances in your syllabus with reference to this particular extract. So this would be helpful for us to measure the product mix. So I'll show you how this is done. So we can look at the 4 products that we are planning to sell: glasses, jugs, bowls and vases. Right, so if we look at the product mix, so we know that we are planning to sell a total of 340,000, and out of which 210,000 amounts to glasses. So 210,000 divided by 340,000, let's see what we get to one decimal place. That would be 61.8%. And doing the same calculation for the other 3, that's 60,000 divided by 340, that's 17.6%. Then for bowls it would be 40,000 divided by 340,000, 11.8%. And finally for vases, 30,000 divided by 340,000, amounting to 8.8%. Now bear in mind that these are the budgeted amounts that we are planning to sell within the upcoming year, right? And this information is directly relevant to sales mix profit variance. So we know that sales mix profit variance is relevant whenever you sell more than one product, right? So even within these product lines there are many sub products, but these are the 4 main lines that we are looking at. So let me give you some indication as to how the sales mix variance will be affected. Now we are given information on the average price per unit and amounting to the revenue, and also in working 2. Now I'll be looking at each of these individually, but for now just pay attention to the total. So if you look at glasses, the total revenue is 9.66 million, total cost of sales 5.653 million. So as you know, total sales minus total cost of sales gives you gross profit, and that is what I have calculated over here, total gross profit, and divide that by the number of units gives me the gross profit per unit. Now sales mix profit variance compares between how the products should have been sold according to the standard mix and how it was actually sold. So we see that the product making the highest gross profit per unit, the product line, and that would be jugs with 26.8. Now kindly note the fact that sales mix profit variance considers the absolute value of the gross profit and not the margin. So we are planning to sell 17.6% of our sales on jugs. Now let's just assume this 17.6% becomes 10%, right? So the budget is 17.6%. Actually we managed to sell only 10% of the total actual sales units for jugs. Now that would show an adverse sales mix variance for jugs, because this is the product making the highest gross profit per unit, right? So it is important for you to sell a higher proportion of the product making a higher gross profit per unit. Let me repeat myself. It is important for you to sell a higher proportion of the product making a higher gross profit per unit. That is how you can make the sales mix profit variance favorable. On the other hand, if you are looking at bowls, which is the product with the lowest gross profit per unit, Our plan is to sell 11.8% of the total value for bowls. But if we actually sell 25% of the actual sales units, turns out to be bowls, then our sales mix profit variance would again be adverse, because we have sold a higher proportion of the product making a lower profit per unit. Right, so that is something you need to keep in mind as to the logic behind the calculation. Now, the other variance would be sales quantity profit variance. The sales quantity profit variance. That is much easier to understand. All that matters is your actual sales units being higher than 340,000. If your actual sales units are higher than 340,000, your sales quantity profit variance would be favorable. So for sales quantity profit variance, what matters would be the total and not individual product categories. So that's some insight into the variances, or the one of the three advanced variances. We'll be looking at the others as we move along. Right, so looking at the first working on revenue, keep in mind that we have so many varieties of glasses. It comes in 3 different shapes and different sizes as well. Right, the same thing goes for jugs, bowls and vases. So as you see here, this is simply the average price per unit. Right, now note that we can calculate the sales mix profit variance for individual categories of glasses. Right, so we have a very wide range of glasses. So to be very precise, let me go back to the information on products. That would be on this page. So we have 3 types of drinking glasses: stemmed, flute and tumblers. And stemmed and tumblers are made in 3 sizes. So that's 3 into 2, right? And flutes are made in 2 sizes. And for each of the 3, we have 6 ranges. So for stemmed glasses, it would be 3 into 6, 18. Tumblers 3 into 6, 18, 36 altogether. Flutes 2 into 6, 12, 36. So that's 48 glasses over here. So we can have 48 different columns for glasses when calculating the sales mix profit variance if required. Right, so it's a very exhaustive calculation. Right. Then looking at how the cost of goods sold was calculated. Now it's very clear as to the costing system that is being used. It's clearly absorption costing. And how do I know that? Because the fixed production overhead has been given for the individual products. Now, refreshing your knowledge on marginal and absorption costing. In marginal costing, the fixed production overhead is considered simply as a total. But if it's being split among the product groups, then it's a clear indication that the costing method is either absorption or ABC. So most probably it would be absorption, and there are some points in the next few pages to prove that. So the cost of goods consists of the raw materials, the different types of raw materials all combined. The direct labor consisting of glass blowers and the other categories of employees. Variable overheads and fixed production overheads. Now there are some notes given. Before we move on to the notes, a very important point I need to show you. So these 2 figures that are highlighted are overheads. Now overheads amount to 21.7, 43.4, 65.1% of your total cost of sales are consisting of overheads. So again, we are looking at the relevance of activity-based costing. Activity-based costing is generally relevant when overheads make a considerable proportion of the total cost. And in our case, it's not only considerable, but it's a majority, 65.1%. Right? So that is one factor that would possibly make ABC relevant. Now, I'm not directly saying that ABC is relevant, right, just because overheads are a majority, but that is one point to consider. right? You have many other points like diversity in the product groups, having a high level of batch related activities and so on. But this is one point you need to keep in mind. Moving on to the notes. Standards for hours worked are based on the working conditions at the time the standard is set. Right, so something we refer to as the current standard. Right, so that's the standard at the start of the year. Standards for prices and rates are based on the price or rate at the start of the year. So that is the normal way of preparing standards. Annual pay rises usually occur with effect from 1st January. Right, so this reminds me of another set of advanced variances that's present in our syllabus, which is planning and operational variances. Now, a standard is generally set at the start of the year, as we see here, but along the way many factors can change. For example, the price of raw materials can change, right? So we know that we are importing silica sand and lead oxide. So sometimes the exchange rates can fluctuate, right? Sometimes the market prices may fluctuate. So those are things beyond our purchasing manager's control, right? And sometimes we might equip new machines into the process, okay, and our efficiency of the number of labor hours would reduce. So that is also beyond our production manager's control. So we need to make sure that our operational staff are only rewarded or only evaluated rather based on things they can control. So whenever the standard or whenever factors affecting the standard changes, the standard needs to be updated, and this is called revising the standard. And we need to calculate planning variances which are uncontrollable. Operational variances are controllable, and operational variances should be the base for performance evaluation. Right. Second point, production workers work a standard 40-hour week. Giglen law states that the maximum they can work is 50 hours per week, right? So we are looking at 20% lower than the maximum, which is a good difference, a good margin. So seems like we are a responsible employer that is not trying to exploit the employees too much. Okay, so we also have employees working night shifts, so it's important to release them from work during daytime if they are continuing the night shifts. And if they are not very happy with working continuous night shifts, then it is important to shuffle or rotate the employees. Third one, variable overhead includes cost of molds, clay furnace pots, water and overtime premiums. Variable overhead is charged to production at a budgeted rate of 14.22 per direct labor hour. Now let me make one point clear here. The replacement of clay furnace pots happens after every 6 weeks, if I'm not mistaken. So the way in which these pots are located, well, it's a common mix that's being used in these pots, right? So we have to question and see whether the direct labor is the correct cost driver over here, right? So if the activities or the overheads are not exactly varying with direct labor, then it is important that we change the cost driver, right, and switch to a activity based costing system. And looking at fixed production overheads, we have the furnace staff, the energy cost. Now energy is, of course, I would say more of a semi-variable cost, because there might be a base fee for the energy bill, but it's charged, but there's a portion that will be charged mainly based on the usage as well. So it may not be correct to treat this as a purely fixed cost. Now that would have an impact on the break-even calculation, because break-even includes segregating fixed and variable. So a cost that is actually variable, if you have taken it as a fixed cost, that would definitely change around the figures, making it unreliable. Then you have factory running cost, maintenance, depreciation, factory supervisors, and production management. Fixed production overheads is charged to production at the budgeted rate of 28.44 per direct labor hour. So That's the OAR, and this is one indication to show that we are currently using an absorption costing system, right? Because all the fixed production overheads are charged based on one absorption base, that is classic absorption costing. So it's always possible for the examiner to test you on the relevance of ABC, right? How does ABC work? To what extent is it relevant to our company? What are the pros and cons, right? So you need to be ready in foresight for requirements such as those. Then we have some more detailed information about medium stemmed crystal glasses. So we have the standard cost card given for 100 pairs of medium stemmed crystal glasses. So let's see what we got. The selling price is 44.5 for a pair of glasses, which is 4,450 for 100 pairs. Now let's see whether we are generating a good margin. So as we see here, the total cost for 100 pairs would be 2529.8. So that is 25.3 roughly for a pair of glasses. So that would give us a gross profit of roughly 19.2 and a margin of around 43%, which is our general margin, general GP margin. So the date in which standards are updated, it's with effect from 1st January 2018. So within the first month or two, maybe there aren't many significant changes, but sometimes there can be if there's a drastic exchange rate fluctuation or there's some new technology that has come in, right? So again, linking that to planning and operational variances. Okay, so this constitutes of raw material, labor, variable and fixed overheads. So we have some in detail knowledge on the raw material breakdown. Now, as you remember, our products have at least 24% of lead oxide. So we are trying to keep it at 25%. So we see that it has been met because one unit or 100 units rather takes 36.4 kilos, out of which lead oxide amounts to 9. So 9 divided by 36.4 gives you 24.7%. So clearly meeting the minimum amount of lead required to label it as grade A, which is 24%, and we have slightly higher than that. Now looking at the costs per kilo, we see that silica sand, it's cheap, although you need the highest quantity of silica sand. Lead oxide is a little, it's more expensive. Potash is also cheap. Other minerals cost per kilo is expensive, but we are using a very small amount, right? So if you are looking at a percentage, it's just above 1% of the total requirement for a unit. Now this can again be linked to the third advanced variance, which is mix and yield variances. So far I have covered sales mix and sales quantity. I also looked at planning and operational. Now we can also link this to sales, material mix and material yield variance, right? So whenever you have a product that uses different types of material and where the amount can be varied, right, to a certain degree, then material mix and material yield variances would be useful. Now in our case, it is required for us to maintain at least 24% for lead oxide. There's no compromising that. But the others, of course, we saw that our research team has done some experiments with varying the amount of other materials or other minerals rather. So at the end of the year or end of a period, now we are calculating variances every month, so maybe at the end of this month we can compare the actual usage with this standard cost card and see to what extent we have complied with this. Now something that we need to worry about would be, or when I say worry about, something that's significant would be the packaging cost. Look at that, 100, right? So as a percentage, this is taking around 60% of our total material cost consists of packaging, right? So 67 is the amount in dollars for all the direct material, and packaging amounts to $100. So 60% of the total 167 consists of packaging. So it's a pretty significant amount, and very rarely you would see packaging making up such a large amount of the total material cost per unit. So we shouldn't be overly surprised also, because considering the nature of our product, it's very fragile, so we need very safe packaging, right? So we also need to evaluate whether packaging cost can be reduced more, because this is the largest component in our raw material. Moving on to labor. Or before that, there is one more point under raw material that says 100 pairs of medium stem glasses has a standard finished weight of 35 kilos. So one pair amounts to something like 350 grams. Right, then looking at labor. So we have a breakdown of the different laborers required. Now mainly in the initial processes, we need the master glass blowers, the glass blowers, that is the qualified glass blowers, and of course the trainee glass blowers. Now here also we can look at mix and yield variance, because if you increase the amount of effort put by master glass blowers, you should be able to reduce the effort put by the other two. Although master glass blowers are charging a higher rate per hour, or they are more expensive. Now once again reminding you, there's a blog in our website on advanced variances. So all of these points that I'm discussing connected to this pre-scene, you have information regarding that in that blog post, so please do check it out. Now this product needs 21 hours from glass blowers, right? So as a percentage, you need 38% from master glass blowers, right? So that is 8 divided by 21. Now we see the pay rate is much higher for a master glass blower, 25. For a general or qualified glass blower, it's 18. Trainee glass blower, it's 11. And it also requires finishing hours and cleaning and packaging. So finishing employees also get a competitive pay rate, and so do cleaning and packaging. So seems like labor seems to be much higher than the raw material, because glass blowing is a skilled job. And it also mentions that standard hours include a 10% allowance for budgeted idle time. Now given the nature of their work, it's important for glass blowers to take a rest, because it can be very exhausting. Okay, so considering all of that into account, it is important for them to have some downtime during the day, right? So for an 8-hour day, it would require for them to have around, say, 45 minutes of downtime, right? So that's roughly 10% of the total time that they are spending. Moving on. Now let me again mention as to the significance of the overheads per product, right? So that is pretty high. Now the next product that is provided would be jugs, right? The medium-sized water jug, which is being sold for $58, and the cost per unit is around 29. So that is generating a margin of, again, 29, which is around 50% gross profit margin, which is much higher than the stem glasses. Now here too, the raw material, the costs per kilo is exactly the same, because it uses the same raw material. So all the products in our portfolio uses these 4 raw material. And here too, the amount of lead oxide is 20.8 as a percentage of 84, that is 25% or 24.8%, which is higher than the minimum required. And here also the packaging cost is exactly 100, So seems like we are using a very similar packing, right? So that's why the cost seems to be the same. And looking at the labor requirement, now this requires more glass blowing hours from master glass blowers, right? So 14, 7 and 6 gives you 27. So 14 divided by 27, this requires around 52% from master glass blowers as opposed to 38% for stemmed glasses. So the pre-scene mentioned initially that producing a jug would be more complicated compared to producing a glass. So that is the main reason why you need a majority of hours from the masters. And here also there is a 10% allowance for budgeted idle time. Okay, so that's the end of the management accounting information. So this is highly relevant for P1, especially for costing and budgeting areas, something you need to do some thorough revision on. Then moving on to the industrial articles. We have 3 interesting articles given. So first of all, this article is emphasizing on the increase of the number of entrepreneurs in the arts and crafts sector. So the increasing demand for artisan crafted items for the home is fueling a revival in many arts and crafts which had up until recently been in decline in England. So the demand for arts and crafts are increasing, which is of course a very good sign for our industry, because crystal glasses are very much linked to the emotional side of things, right? So it has a lot of artistic value. Now the second paragraph emphasizes on the glass blowing, the effect on glass blowing, right? The art itself is ancient and the skill itself is largely unchanged from those times. It takes a 4-year apprenticeship and a further 6 years of experience to become a master glass blower. So that's 10 years in total. So it's not so easy to become a master glass blower. It requires a lot of time and effort. Now, what King Crystal can do is it can provide apprenticeships to trainee glass blowers, and generally the retention rate can be influenced by the way you are treating these trainee glass blowers. So if you are giving them a proper training and proper working conditions, then there's a good chance that you can get them to become a permanent glass blower and move from being a trainee to a qualified glass blower and then to a master glass blower. And you can make use of these employees' abilities for the business, right? So it's all a part of HR's retention. So over the last year, there have been 20 new artisan glass blowing businesses set up in England, all single entrepreneurs creating beautiful and finely crafted clear and colored glassware for the home to be sold at local markets and fairs. Some of these new businesses have even broken into the mainstream market, selling to large department store chains. Now, that's a bit of a threat to our company because we mainly rely on the 2 department stores. 30% of our sales comes from that, right? So higher the amount of artisan manufacturers, it can eat out into our market share. Right? So our competitive strategy should be robust in such a manner that we increase market share, if anything, rather than losing it. And see, it's also possible for the examiner to test in a scenario where we are considering to start some sort of an institute that's training on glass blowing, because we have so many glass blowers in our business, right? And we have the skills. So that is another business that we might consider diversifying into, and that would of course be a service company in that case, right? So the scenarios are endless for this exam, right? Moving on to the next article. So this is emphasizing on the consumer spendings. Consumer spending on luxury items is an all-time high, with homewares being top of the list. So this is again a good sign for our industry, because crystal products are considered, upmarket or more of luxury items, right, that are much expensive than glass. Again, that should be carefully maintained. So this reporter is mentioning about his childhood. The parents had set of crystal glasses that was not frequently used, but now the attitude has differed rather. Beautiful objects such as drinking glasses are there to be used and enjoyed, right? So more people are making use of crystal products rather than simply keeping it for just storing it and placing it because it's a very valuable item. The changing attitude in society has helped to drive consumer spending as we buy latest trends, right? So we also saw that since recently drinking glasses for wine, they are starting to use tumblers, right? So here it goes again, it's being mentioned in place of the traditional stem glasses. Now this would have an impact on our sales of stem glasses because stem glasses are generally used for wine, and if most bars and businesses are buying tumblers, then you can reflect it through the sales mix variance where the percentage of stem glasses would reduce and tumblers would increase. Now if tumblers are giving us a higher margin or higher gross profit, that would definitely be a favorable trend for us. And also a fashion for colored glassware, something that we are not currently doing. So if the demand keeps on increasing, or if we can predict the demand to increase, then we should consider getting into this section of the industry. Right now there are difficulties in producing it, but nevertheless, if a market is building up, you should somehow find a way to produce this and supply it to the market. Otherwise, you might lose your competitive edge. There's a new outlook on the horizon. While we want to be fashionable, we also want to be responsible. Increasingly, our consumer habits are influenced by the environment. So the importance of environmental management is being emphasized in this, right? So we need to take measures to ensure that we are following procedures and practices that are in the best interest of the environment. We have moved into recycling water. Right now, the impurities in our material, how it will have an impact on the environment, we don't exactly know. Maybe you can do some industrial research on it and see how it has an impact, because your examiner may throw out a scenario on that. We are becoming pickier about where the products we buy come from and how they are made. So making sure that we source from ethical suppliers is very important, right? So not only should we follow practices in line or best practice of the environment, but it's our responsibility to conduct due diligence on suppliers, perform supply audits and ensure that they too are adhering with these high standards that we are maintaining. Right, moving on to the last page of the pre-scene. Again, another article regarding a television series named Heart of Glass. Okay, so the Sunday night television series Heart of Glass has proved to be a tremendous success in the first series, and 2 more seasons have been commissioned. On paper, it doesn't sound that exciting, set in a glass blowing factory 150 years ago. The series follows the lives of everyone involved, from the lowly furnace coal feeders through to management and the owners. Now, this is very true, because when you read this on paper, it does not sound exciting. Right, so when I got my hands on the pre-scene for the first time, well, I read through the entire pre-scene. It sounded all right, I would say, right? Not that overly exciting, but once I, checked out some YouTube videos, I was really amazed by, how things work out in the crystal glass industry, glass blowing especially, right? So I can really feel, the essence of this newspaper article. Yes, true, it's a fictitious one, but this is a very true fact. The series has been praised for tackling the issues of the day and for its careful attention detail in its depiction of the period. And we see that the production company has worked very closely with King Crystal, with us, right, to ensure that technical aspects are correct. Indeed, I understand that some of King Crystal's glass blowers have even been included in the series as extras when a shot of actual glass blowing was needed. So the credits would reflect the fact that some of the scenes were shot in King Crystal's factory, right? So that would be some publicity for King Crystal. Okay, so us providing support for this TV series to be shot in our business, it's a win-win situation, right? So it would be beneficial, of course, for the production company, and it would be a very powerful medium of advertising for us. Now we know that our marketing strategy is such that we are looking into personal selling, right, and we are advertising in a few magazines, but this is something that can be seen as effective because the modern trend is that many people they are into TV series, and although you might miss it out on TV, you can still tune it through YouTube or other live other streaming providers. So definitely our name and our company, our factory will be highlighted, which means that would create some sort of an attraction from potential customers to buy our products. And the last para, King Crystal have also designed and made all of the crystal used in the filming the dinner scenes in the factory owner's grand house. Right, so again, another plus point for our marketing strategy. When asked, Paolo Aldo, managing director, said that he was delighted to be involved with Heart of Glass and that he has had requests to start operating factory tours at the factory site in Templeton. Clearly, the TV viewing public still has an appetite for period dramas. Now, emphasizing on this last point that I highlighted, operating factory tours. So, there are a few aspects that we need to discuss. So, we could possibly, charge a nominal fee from the people who are willing to take a tour. So, that would be more of a profit center in that case. Or else we could consider doing this as complimentary. Now, what they need to be careful is that people who are coming on these tours do not cause disruption or disturb rather the processors or the glass blowers, because glass blowing is something that needs careful attention and the glass blowers can't afford to get too distracted, right? So they need to be very careful with of course their safety, and in addition the shape of the crystal product that they are making and so on, right? But definitely this is something that can boost sales, because a customer who has not bought crystal products, let's say, takes a tour and sees how beautiful the process is, right, and then gets emotionally attracted and then ends up purchasing a crystal product or two from the shop in the factory itself in Templeton, right? So definitely a good move, right? So publicity in terms of the TV series and customer attraction from factory tours. So overall, the pre-scene talks a lot of good things about the company, right? So we don't see any major problems in the company so far, right? But that does not mean that the examiner will not create a problem, right? So you should have a balanced view with the given information. Yes, true, the company is performing well. Profits have increased from last year to this. They seem pretty stable in terms of liquidity, right? Marketing they are coming up with these marketing methods of letting the TV series being shot and also considering to operate factory tours, right? So and then of course the glass blowing industry is picking up. So all of these are good signs for the company. Now, since we have finished discussing the pre-scene, let me give you some tips or advice into your study preparation process. So guys, it's very important to make sure that you go through all the areas in the three subjects, right? Yes, you can anticipate certain scenarios and areas based on the pre-scene, but do not do the mistake of limiting your studies to only those particular areas, because trust me, you might be wrong, right? So there are many areas that I would personally anticipate in creation of mock exams, but the actual exam can be somewhat different, right? Now, with our mock exams, yes, most of the time those areas were tested at the actual exam, but there have been certain areas that we would have never thought of, but it turns up at the exam. So you need to be prepared for all the areas in your 3 subjects, right? So do some proper revisions, okay, before practicing mock exams and practice exams relevant to this case. Please make sure that you familiarize yourself with all the areas in the syllabus, right? So once again reminding you, practicing at least 5 mock exams, that's very important for you to pass this exam first time, right? Or if you are repeating this exam, well, somehow clearing it this time itself, right? So 5 mock exams properly timed in a simulated exam environment, and we at CIMA, we can offer you that facility, right? So you'll see a link, you'll see a link at the bottom of the first video that I uploaded in YouTube, so you can follow that. And also you can drop an email to info@studycima.co.uk, and we would be more than happy to provide you more information. And please do check out our blog on the site www.studycima.co.uk. We'll be uploading some interesting articles that would immensely help you for your exam. So I wish you all the very best in your operational case study.